Late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, arena so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, welcome back. Today we're going to jump right into things. I want to talk about the Bitcoin miners. So yesterday we talked about Bitcoin market cycles, the structure of the market cycle, and some potential outcomes that we could face in the future here. So I want to talk about another one of my core cycle conviction plays. This is the Bitcoin miners. I've been involved in them for multiple cycles now. I do think they offer kind of a leveraged proxy on top of Bitcoin, allowing to give us kind of some more substantial returns if we can position ourselves at the right time. That being said, Bitcoin is experiencing a bit of weakness, starting to break down from some support levels, so we need to take a look at our miners, figure out what's going on, and see what the next step is in our plan here. So we're going to jump right into things. I'm going to start here on the Bitcoin chart. So we're looking here and just trying to take a look at the prior cycles to see if we can't get an idea of what might happen here. So I'm not going to get too in depth because that was covered in my video yesterday. So if you haven't seen that, go check it out and see kind of the potential scenarios we're looking at for Bitcoin here. So right now we are just kind of in this consolidation box right through here. I'll zoom in just to make it a little bit more apparent here. So holding decent support here on the daily. If I flip to the daily chart, you'll see it a little bit better here. So I have this box drawn. Essentially we came down, we have a little bit of support here where this wick was, also coincided with this low over here. So we're just chopping away just in this range, you know, nothing too crazy, but we are in that technical downtrend structure, so not interested in taking any kind of major position at the moment. We did have a swing position in Bitcoin. Opened it at 87,000. It bounced. It did pretty well. We were up about 20% in our leveraged position, but it did come back. We moved our stop loss up to entry as soon as we got that bounce. So we removed all the risk from that trade. Unfortunately, came back, hit our stop loss, took us out, but that's fine. There's nothing wrong with that. You know, nothing gained, nothing lost. We just tried to take advantage of playing this range here, and it ultimately just rejected on the lower time frame and came back lower. So just signaling to me that we need to do more consolidation work right around here before we can kind of expect any potential reversal to the upside. So flipping back over to the weekly just to compare it to other prior cycles. So if you see right here, I'm just looking at this box right there and looking at this kind of we were consolidating a little bit right in through here in the prior cycle, but then we see when we lost this box here, we tried to regain it by breaking this resistance here, ultimately rejecting and continuing down. So this is kind of what's marked the start of the broad market breakdown in terms of Bitcoin for that cycle. You can see looking at the cycle price action, we kind of had this first peak here where we had this initial extension of the 50-day moving average above the 200-day moving average, which is kind of what you could argue might have taken place right through here. And then we kind of had our downwards consolidation, a big drop right through here. The drop over here wasn't as aggressive, but there could be a couple reasons for that. So right around here, essentially we had Elon Musk last cycle really hyping up Bitcoin when Tesla bought a ton of Bitcoin. Really just sparking kind of a lot of interest in the asset, sending us up here. It wasn't just him, but then we saw up here, basically he kind of changed his tune. He started to give in to some of the ESG FUD that was surrounding Bitcoin at the time, which was ultimately not really true in the end anyways. But we did see a substantial market sell-off right through here. So that was about a 50% or so correction, I believe. 55% correction from that peak to that low in the middle of the cycle. So we've seen kind of a correction over here from this high to this low here. Not quite as much as the other one there. So 33%. Still a pretty decent mid-cycle correction in my opinion, especially considering this correction here was kind of sparked by bearish news, where we had a lot of bullish news right through here with the ETF, as well as continued institutional and nation-state adoption of Bitcoin. So not really surprised to see a little bit less of a drawdown, still within that realm of a normal mid-cycle correction of about 30 to 50%. But we also saw just breaking, as soon as we kind of broke this downtrend structure here, we got back above our 50-day and 200-day. So similar to over here, see how the 50-day lost the 200-day. Our price action came back down, retested kind of lower support levels here before ultimately breaking breaking back above, going for that second leg up to the next cycle highs. So that's kind of what I see over here. We're in this downtrend structure. We managed to break out. We held our lows, so we have our higher highs, higher low price structure. We're holding our support here, and then we got our second leg up. So it's almost similar to what we see right here potentially. Coming below, losing that support, getting back above, retesting, and then putting in that next cycle high. So if we look here, what I'm kind of looking at is after this peak here, we experienced a 77% correction to the bear market low. It's interesting to note that that is right below this high time frame Fibonacci golden zone from this low to this high of the cycle. So that's an interesting confluence of support there. Another thing I want to show you is right here. This is the mid-cycle, the mid-cycle kind of pump that we get during the bear market. So essentially, we have our parabolic bull market right through here like this. And then we go into our long downtrend like this. We end up in our sideways consolidation phase here. This is what we call the first bear market rally. So we had our uptrend structure through here for our bear market rally, ultimately topping out right about here. So you see right where we topped in our bear market rally, that kind of support zone is what acted as support kind of in this cycle through here. So you can see this support zone coming back here to the bear market rally of the prior cycle, kind of coinciding with that Fibonacci 786 zone. And then we see that low coming in at about 77% from the peak to the low. I want to show you another of the prior cycle as well, just to give us another good example here. So you can see in this cycle, this was the peak right here for that bear market rally before we retested, put in the higher lows, and continued on our parabolic move. And look right here again, guys, the Fibonacci golden zone from the low to the high, coming in right around that 786 with confluence of this horizontal support zone. That was about an 83% correction from this peak to this low. So we can also see that similar extension on the 50-day, although in this cycle here we did not get a secondary peak. So important to note, slightly different structure in my opinion, but also just interesting to note the kind of similarities here. So the lows really coming in to the prior bear market peak with confluence of that 786 Fibonacci level. So we can kind of use those to kind of gauge where we might look for a potential low. This is assuming that this is the cycle top and we are in a left translated cycle and just due to bleed. I kind of mentioned it's one of the potential possibilities I talked about. It's not necessarily my base case, but we need to be ready for this to happen. So if we do look back, we see our horizontal support zone coming back to our bear market rally high right here. We see if we were to experience a 70% correction, so that would put us right in the middle of this zone, just below our 786. You can see 70% correction right through here, so that also kind of supports the diminishing returns, diminishing losses theory. Essentially, as an asset continues to grow in size, attracts more liquidity, it becomes a little bit less volatile with time as it goes on. So we can see here that first cycle that I referenced over here to the left, that was an 83% correction, and then we had a 77% correction, and then we might be due for, if we come down to a similar level, a 70% correction. So kind of, about 7% less of a correction each subsequent cycle. So it is interesting little similarities there to pay attention to. We do need to make sure, so this is something I'm really going to be watching. If we break below this support, so right through here, 68.5 kind of up to about 73,800, that's going to be really important support to hold. You can see it basically acted as resistance all through here, as well as our prior cycle peak over here. So I want to be sure that we're going to hold this. It wouldn't be surprising to come down. You can see every single time that we kind of got below that 50-day and 200-day, we at least consolidated underneath it a little bit here. Same thing over here, broke below, consolidated underneath. So I'll kind of just draw that for you. I'm just consolidating right there. Sorry about that. like that, and then same thing over here, consolidating underneath all the way through here, and then same thing that we saw right here. So if we do see price action come down, swing around here, we do have that confluence of support of this down sloping trend line and our horizontal support right here, but we're gonna really need to see a bounce kind of take place right around there. If we break this trend line and we kind of break below 65,000, that's where I really start to get worried about the market structure, and we could be due just for that left translated cycle and potential to break down. A lot of it's going to depend on the macroeconomic conditions as well, so we're not really going to have confirmation until we actually see that breakdown and subsequent rejection, watching the price action very closely. But that's it for Bitcoin for now. I want to jump into the Bitcoin miners. Why I started with Bitcoin, obviously. Bitcoin miners are a leveraged proxy on Bitcoin, which means they generally perform they generally outperform to the upside as well as underperform to the downside. I consider them about 3 to 5x leverage. So if we saw Bitcoin make a 25% move to the upside, it's not surprising to see miners make anywhere from a 75% to 100% move, really outpacing that kind of to the upside because of the low market caps. Same thing to the downside when we see these substantial downtrends. So right through here, Bitcoin dropped 77% last cycle. Most of the miners dropped 95%, so definitely to the downside, experiencing more pressure as well. But you can't have the outperformance to the upside without the underperformance to the downside. It's one of the risks we take when we enter these leveraged kind of proxies or positions on Bitcoin. So we're just paying attention. We want to make sure we're holding key levels of support, and hopefully we can just come back, gain this as support, get back above the 50-day and 200-day, and continue moving on here. I'm going to flip over to kind of the Bitcoin miners, so more now individually. This is WGMI, so the Bitcoin miner ETF, the Valkyrie ETF. Just looking at it, so right now it looks fine, but we are kind of just riding this upsloping trend line here. We haven't had any sort of parabolic move this rally really from the miners, but we've seen all these little individual rallies. They have been great opportunities to kind of build positions here. So buying in here, riding the trend up, buying the Fibonacci retracement. I've showed that multiple times. I've talked about that in my Telegram group over and over. I always talk about buying substantial Fibonacci golden zone retracements and then taking your profits at 2 to 3x when you get those moves. So every single one of these rallies moved at least 2 to 3x off of the Fibonacci golden zone. So if you bought in here and you were diligent and you took your profits as per the strategy up here, you've de-risked that trade and you have a free position. Essentially that's what I did just over and over, and you just build this position. You can increase your share count or lower your cost basis. So we are looking fine for now. We're kind of at this more oversold territory in the RSI. Similar to other bottoms here. So we saw right through here, that was a bottom right through there, and also over here. Our MACD is quite oversold as well. And then our Bitcoin pair strength indicator here also flashing a red dot. So you can see when the last red dots flashed, essentially lining up with the lows right here and lining up with the lows over here. So a good little indicator, just showing that it has been underperforming Bitcoin recently, but we're hoping that we can just bounce from this support zone and get another leg up in the market. That being said, if we break below this and we come up back test it and it looks like we're going to reject from here, that's going to be a little warning signal. We might have to de-risk some of our miners even further. So I have my core cycle positions. That's CleanSpark, Marathon, and Iris Energy. Sorry, in that order. CleanSpark the largest weighting, and then Iris Energy a little bit lower than it, and then followed by Marathon, just for different reasons. The reason I like CleanSpark is their pure form fundamental strength as a Bitcoin miner. The reason I like Iris Energy is they're a really strong fundamental Bitcoin miner. They also have that AI hype narrative. They have a massive energy portfolio, and they could attract a hyperscaler deal in the future. But Marathon is one kind of I hold based on the intrinsic value because they have such a large amount of Bitcoin on their balance sheet. The actual enterprise value of their company exceeds the market cap. So essentially, you know, if you're buying Marathon, they are technically undervalued, but from a fundamental perspective in terms of Bitcoin mining production, they're not quite as strong as some of the others, but they kind of make up for that with their first mover advantage. So they are the big gorilla when it comes to Bitcoin mining. They've got the largest hash rate and they've got the most liquidity on their balance sheet. So it's something to pay attention to. We'll flip over to our Bitcoin miner tracker document right here. Not a lot has changed. So a lot of these are kind of be dependent on the monthly updates, which they aren't out yet. We're going to still have to wait a couple weeks before we get our next monthly output here. But we do see kind of just the performance here, looking at them ranked against each other. What I want to kind of look at instead here, it's more of the share price metrics, because the fundamentals haven't changed. They remain strong, but the market structure may have changed a little bit. So we're going to look at the valuations of these companies. We can see our market caps here. So just ranked kind of based on a high to mid to low cap. So we have our kind of higher cap market, our higher cap stocks right here. So just switch that to hot, sorry, it's green. And then we've got our enterprise value. So ideally, if the enterprise value exceeds the market cap, which a lot of these do now, I actually have to just update this a little bit because of the downwards price action. Essentially, all of these companies are getting their enterprise value is exceeding their market cap. So you're kind of getting more value for the assets than what you're paying per share. So very interesting from an enterprise value to market cap standpoint. A lot of these companies looking a lot more looking pretty undervalued. We see their share price here, outstanding shares, their Bitcoin hodl, so how much money they have held on their balance sheet in Bitcoin, their cash and equivalents, so that was the last reported number that I was able to find, and then our liquidity to market cap ratio, really important ratio. Essentially, it shows you how much value in liquidity or kind of tangible assets that they have compared to their market cap. The higher the ratio, the better. So we see here lots of these guys. I'll flip BTBT because they're up as well. So yeah, just we see here, you know, DMGI, BTBT, Hive, we've got Riot and Marathon all holding substantial amounts, over 50% of their market cap in liquidity, up to even 67%. So it's also, you know, 42% of your market cap in liquidity is still really strong for CleanSpark. Where I think they really excel is that fundamental production of Bitcoin and their cost and efficiency. So just because they have a lower liquidity to market cap doesn't mean it's a worse deal, because they make up for it in other fundamental aspects of their company. Looking at the current ratio, which is just their ability to pay off their liabilities with debt, or pay off their liabilities with their current assets. So we see here, the bigger the better. Obviously, we want them to be able to pay off any debt. BTBT just blowing everyone out of the water because they have a lot of liquidity, 62% of their market cap, and they have zero debt. So a huge current ratio for them. But essentially, most of the miners able to cover any kind of near-term liabilities with their liquidity. The price to book ratio we see here, just valuing the company kind of with its there on an undervalued basis. The higher the number, it's going to be show you a little bit more overvaluation compared to the peers. Looking at debt to equity, so obviously the lower the better. We want these companies to have very little debt and a lot of equity here. So we do see cores quite high, but that's because they're kind of Chapter 11 bankruptcy process. So we will continue going on. Their EV divided by revenue, so lower the better, just showing relative undervaluation compared to the peers. So Hive, Bitfarms, Bit Digital, and DMGI really showing strength here in terms of undervaluation. It's interesting also, they are the smallest market cap miners of all these ones that I follow. So they do see the small cap miners are getting undervalued a little bit more relative to their fundamentals, as opposed to the larger cap miners, who kind of all have this EV revenue ratio kind of up here, anywhere from 6, 7 up to about 11, 12. Looking at their EV divided by hash rate. So the bigger the number, the bigger the number, the worse it is. It's just showing you, again, relative valuations of their enterprise value divided by the hash rate that they have. That being said, with miners like Core Scientific and Wolf, it's not necessary, and BTBT as well, because they gain a lot of their revenues from HPC and AI. It makes sense that they're being valued a little bit more per exahash, because they have a lot more infrastructure and energy diverted to AI and HPC. So not necessarily a red flag, as long as the other fundamentals all kind of look good. market cap divided by exahash minus their HODL, so subtracting the amount of assets they have on their balance sheet and then taking their market cap, dividing it by the exahash for a relative valuation here. So we see, excuse me, Marathon here, looking very good, undervalued. CleanSpark a little bit more overvalued, kind of middle of the pack here. Yeah, essentially, you know, anywhere. So yeah, not a whole lot in terms of crazy undervaluations here. I would even say Hive is probably yellow there. But DMGI and Marathon looking the best here in terms of undervaluation relative to the peers, and the AI HPC miners garnishing a bit more of premium on top of their stock. We have their last reported cost to mine per coin. We've got the amount they diluted, and institutional ownership. This is one I want to touch on. We've really seen institutional ownership of these miners jump up in recent weeks. So we see Marathon here at 62%, CleanSpark at 54%, Riot almost 59%, Core Scientific 90% institutionally owned. That's a pretty impressive number right there. That being said, it's interesting because these institutions aren't necessarily all long. They can short these companies, and they need to buy shares to lend them out to short. So just because it's 90% owned by institutions or 54% owned by institutions doesn't mean that all of those institutions are long. It was kind of like a a lot of these miners are shorted from 20 to even up to 25+% of their float. So it's obvious that a lot of these institutions, a lot of them are bullish, but there are lots that are buying shares to lend out to short. Shorting has a negative effect on the stock market price. It helps suppress it, so it can cause a lot of manipulation. And then just looking here at our analyst price target averages across the board just gives us an idea of what the analysts are kind of thinking and what might have the most upside if they do reach those targets. So flipping over to the individual charts here, I wanted to look at the prior cycle bear market here. There wasn't a lot of miners last cycle. There's only a select few. It's gotten a lot bigger, a lot of new companies getting in over the last 4 or 5 years. So I'm taking a look at Marathon. They're one of the oldest, one of the biggest, and just kind of looking at their price performance during the bear market over here. So we saw they had a 216% rally from the low to this high, and then a substantial retracement here. I know it doesn't look like a lot, but because this chart is, it just has to be zoomed in quite a bit to actually see this, and I'll show you over here kind of different price action of the current cycle. But we saw a retracement here, and then from this low to this high, we saw a 125% move, and then another substantial kind of retracement. That's going to be like a 40-50% drop back to these lows, and then we saw this 512% move to this high, followed by a 71% correction before we got into our parabolic phase of the market. So you see here the 50-day getting above the 200-day, holding it definitively as support, curling up very aggressively in that parabolic structure. We bounced up here 350% to this high, and then a quick 35% correction here before we moved on to go to new highs for the cycle. I'll show you that right through here. So looking from there, after that 35% correction from that low to high, we then saw this move essentially. So it was a 1200% move from that low to the first high. There was also, look at these substantial corrections in here. So it's not always straight up, despite what anyone tells you. Even this to this, like that's a 45% correction right there. And then this right here, even, you know, from this high, from this high right here down to there, that's another 45% correction. So we get these aggressive moves up, and then we also get these substantial retracements back down. So we see after our 12x move here, we had a 70% correction again. So multiple 70% corrections throughout the cycle, as well as multiple 40 to 50% corrections. That's why you need to be ready and take advantage of this volatility. Then we even got one more leg up here for a 350% move before going into our sustained bear market downtrend and ending up where we are right now. So we see kind of here similar to what we saw over there, we just see all these little rallies. So this was like 150%, about 150%. So just little rallies here and there, but we haven't had that parabolic move. But if we continue to see these moving averages curl back over, it's not going to look amazing. That's where I kind of get into the point where if we have that left translated cycle, things are just going to continue bleeding and breaking down, and we likely might not see new highs for alts or proxies, and we could just be due do to kind of continue going down. So that's when I talk about Bitcoin. I have my invalidation point in terms of Bitcoin where I'll need to de-risk as we kind of, if we do hit it, then I need to adjust my strategy and protect my capital as much as possible. If we just look here though, so if we experience a normal 70% correction like we saw in the prior cycles from this high, that actually takes us right down to this 786 Fibonacci golden zone from this low to this high. So a cycle 786 golden zone, if we're going to continue up to new highs and we get a traditional market cycle, this is going to provide really good kind of accumulation opportunities right in through here. So if we come down here, we're just going to be paying attention to Bitcoin and the SPY, watch for strength in the market and see if we can get some of these lower entries filled. This is going to be really good opportunity, assuming that a traditional cycle plays out. So again, a different one of the scenarios that I think could play out, but we need to see what happens in the macro side of things before we kind of make any decisions there. So taking a look at Marathon specifically, I'm going to run through all of the miners here. Basically what I see, we're going to look at some of the momentum indicators. So we see our DMI, this is a bearish setup. We see our MACD kind of just curling back over here. So that still is kind of bearish. And this RSI is not quite down to oversold levels yet. So a lot of the miners, the momentum indicators are going to look quite similar. I do think unless we can get some strength from Bitcoin and the SPY immediately, then we're going to just continue bleeding to these lower levels. So I've marked down here these accumulation ranges that I'm currently looking at for different miners. So Marathon, we're looking at about $10 all the way down to $3.32. I've got two other areas marked in through here. It could be a good opportunity to accumulate Marathon right through here, assuming that our market structure is starting to kind of look a little bit better. Well, flipping over to Riot, I'm going to run through these really quick because as I said, not a lot of them look that bullish right now. We want to see more strength. We want to see that proper reversal structure of higher highs, higher lows, supported by our momentum indicators. You guys know my thoughts about that. Kind of just going to beat on that drum over and over because it's really important. That's what helps me recognize weakness in the market. So looking at Riot, we're looking here anywhere from $7, kind of just above $7 down to about $3.30 is going to be that accumulation zone for Riot. Flipping over to CleanSpark, looking here, breaking below, unfortunately, our zone right through here. But we see our 786 Fibonacci, so 675 roughly down to $1.50. I know it's a pretty wide range, but we need to kind of take, these are all pretty important technical support levels through here. So there is the potential. I like to just have these ranges and then use these in a dynamic DCA basis. So if you've seen my prior DCA video, I talk about different ways that we can dynamically or technically DCA into these companies based on historical support. So this is where I'm targeting for that through here. If we come in here, you might be starting some of your smaller buys at the top of the zone and then weighting your heavier buys towards the lower targets in the zone, ensuring that price action looks good and our indicators support that thesis as well. Flipping over to Cypher here. Cypher actually looks a little bit better than some of the other ones. It's still holding this up-sloping trend line right through here, still sitting above its cycle Fibonacci golden zone. So I do think if they get more continued investment from SoftBank, that they could continue running because they're likely going to provide some sort of AI infrastructure to the Stargate project. That's what sent them from here on this run up through here. So we're just paying attention. This trend line might not be a bad place to enter, assuming the market structure looks good at the time. Otherwise, my thoughts are we come back to these lower Fibonacci golden zone targets of around $2 and lower is what we're targeting for Cypher there. Flipping over to Bitfarms, I'm not as interested in Bitfarms personally. Their management has kind of just made a few blunders this cycle and last. I was hoping that they kind of figured it out and addressed those issues, but the issues are still prevalent. They're missing their growth targets. They recently just sold their almost finished data center development in Paraguay to Hive. So they abandoned a project that was 80% complete to kind of chase AI and HPC after it had already run. So they kind of missed the hype run on AI and HPC, and they've just haven't garnished any sort of premium on their stock since announcing that. Whereas other companies, they kind of really pumped on that AI expansion news. So kind of just think, to me, it seems like a bit of a gimmick play from Bitfarms, trying to really just bring some value back to shareholders. They missed their growth targets. They denied to, they essentially were offered to be bought out by Riot at $2.30 a share. They denied it because they thought that the company was worth more. And now look at this, guys. Bitfarms is currently trading at $1.18. So I really don't like what management has done recently. I've kind of just lost a lot of faith in them. I had hoped that they were addressing the previous issues, but they're still relevant. They're still here, and I'm not interested in the company. I would rather focus on the companies who continue executing on their strategy, not this, because essentially giving up that premium on their share that they could have garnished by merging with Riot. They could have supported their growth strategy. So yeah, just a little red flags for Bitfarms for me personally. But if you are a Bitfarms bull, you know, where I'm looking at next is down here under $1 and then down towards 40 cents, maybe even getting a little bit in here at 70 cents, something like that. Flipping over to Hive here. I do like Hive from a fundamental perspective. They are really strong, but price action not really showing much love for the fundamentals here. That being said, I do think there is good value in kind of Hive down here, assuming the market structure turns around. So kind of looking under $2 down to about $1.30 for Hive. Flipping over to Hut. Hut also looks a little bit better than some of the other ones. We've got this upsloping trend line right through here, acting as support, support, and support, kind of lining up with our 786 Fibonacci. So looking for positions in Hut kind of closer to $10, and then all the way down here. These are other targets that we're watching coinciding with these support levels. Flipping over to Iris Energy. Looking here, another one that looks a little bit better than some of the others. It's kind of just holding this upsloping trend line with support all the way through here. So if we come back, you know, this would be a higher risk entry right here, kind of 675, assuming that the markets might be able to turn around there. And then otherwise, look for that accumulation zone of Iris Energy. If we see a broad market breakdown from $4.25 all the way down here with these marked targets as well. Flipping over to TeraWolf, another one that's kind of looking a little bit better. So some of the AI related companies here like Iris Energy, TeraWolf, Hut, they're looking a little bit stronger than some of the other miners right now because they were able to garnish a bit of premium on the stock just from that news. So holding this upsloping trend line right through here for now. We've also got this longer term trend line all the way through here. So that's kind of what I'm targeting more as a potential here, right around that 786 down here in this accumulation zone. So looking if TeraWolf comes under $2.50 might be an opportunity to buy there if the market looks good. Looking at Core Scientific, getting a nice bounce here from this upsloping trend line and pretty much the 618 Fibonacci from this low to high. That's a really good retracement rate there, considering this was when they were in bankruptcy. So I didn't really expect them to come back down here. I would kind of hoped Bitcoin would show a bit more strength and continue up. That being said, you know, we had to be prepared for it. The Fibonacci zones are kind of always in play until they're not. So until they get hit, they're technically in play. So it did come down, bounce on this trend line, 618. So we're just watching this. You know, if we come back here for Core Scientific from 867, it's going to be higher risk, but might still be a decent entry. But looking here at the lower targets in our golden zone, Core Scientific does have a 12-year deal that's going to bring in $12 billion potentially of revenue over those 12 years, assuming it gets fully exercised. Oh, no, sorry, it's $8.7 billion, assuming it gets fully exercised, the full 500 megawatts. It also doesn't account if they divert any more additional energy to AI HPC, could give more premium to the stock. So just watching Core Scientific, flipping over to Bit Digital here, kind of riding up in this parallel channel right through here. But we do see we might be losing it right here. So watching Bit Digital, I'm looking at accumulating it kind of here, $1.63 down to about 50 cents. You know, this is the accumulation zone. Flipping over to Coinbase, take a look at a couple other of these proxies here. So we see for Coinbase, I'm looking at accumulating, kind of starting maybe here within this golden zone and upsloping trend line right through here. So under 150 down to 100 is the golden zone that we're looking at. And then if we were to come back to these lower targets here, $30 up to $50, that's bear market low territory, considering Coinbase is the primary custodian of all the major ETFs ETFs and they're the biggest exchange, you know, it would be a pretty good deal for Coinbase in my opinion. Flipping over to MicroStrategy, another favorite proxy here. You know, a lot of people telling me that I should be buying up here, but you know what we do when we look at this chart and we see it just straight up and to the right, then we just wait patiently and we wait for our entry. So coming back, we'll see how it reacts with the 200-day moving average down here. Could be a decent little opportunity. We see if we come back to 618, 200-day, you know, horizontal support looks decent through there. Might be a little swing opportunity, but ultimately also targeting the lower 786 region down here. We need to be ready for these potentials to play out. Looking at square or block, so looking through here, essentially, you know, it hasn't extended far off of its of its bear market lows, kind of just been chopping in this range. So holding this trend line for now, not sure it'll hold. Instead, I'm just targeting this range down here of the bear market lows, $55 down to about $40. Could be an entry in square. Flipping over to Galaxy. Here, Galaxy, this is another one, guys. Everyone telling me Galaxy is going to be the next hot thing up here. It's going to go up to $100 a share. And you know my thoughts. We don't buy this chart. We just wait patiently. Same thing with MicroStrategy. Same thing with Palantir. Same thing with Tempest AI. All of these things that have just gone up and to the right on hype, come back to earth, retest lower support zones. That's why I say wait patiently, and then we'll let the entries come to us. So Galaxy, kind of holding this upsloping trend line for now, has just wicked below the 200-day, 50-day and 200-day curling over, looking pretty bearish. I think we're again just due for more consolidation, looking for that potential entry anywhere from around $15 down to about $10 for Galaxy there. And then DMGI, you know, not one I'm really interested in because it's a very small cap, very low institutional holdings. They do only trade in Canada, so it might be a little bit difficult for certain people to access this stock because of the accessibility in terms of stock exchange. But if you were interested in DMGI, you know, looking down here in this bear market low consolidation range, but you know, I'm not personally interested in the company itself. So I know that was a lot of charts and stuff to run through, but I kind of wanted to give you a little update. So I am, as long as the market structure of Bitcoin holds, I remain bullish on the Bitcoin miners that I believe have the strongest fundamentals. I'd focus on the fundamentals because when price action sucks and things are going down, you need to be sure that your company is going to be okay financially, and they need to have strong fundamentals in terms of production as well as their balance sheet and fiscal health to ensure that they can handle and come out of these downwards kind of periods even stronger. You know, last bear market, we saw miners drop 95% from their highs, and it took a lot of conviction to really see something down 95% and then put more money into it. Like, it's really hard to overcome that psychological barrier. So for me, ensuring that the fundamentals make sense and the value is there. So when I talk about that, I'll flip back here and show you my miner tracker again. So I'm talking about the fundamental value. When you see the enterprise value exceeding the market cap, you know, assuming that Bitcoin doesn't absolutely just dump out and drop a crazy amount, you know, these enterprise values should kind of remain elevated at least because it counts for data center infrastructure, it accounts for assets like Bitcoin and cash, as well as their mining infrastructure. So when you see a company that's profitable, you see a company that holds more in assets than what their market cap is worth, and you see them trading at a discount, that shouldn't scare you. It should actually give you opportunities to buy undervalued assets. But that being said, we need to make sure that the underlying asset that kind of supports our whole thesis still shows strength. So the Bitcoin miners cannot run unless Bitcoin is showing strength in the least, and ideally the SPY and traditional markets are also showing strength. So we want to ensure Bitcoin looks good, it can continue up, and the SPY looks good and can continue up to support our miners for that next leg. So until then, we just follow the charts, you know, we wait for confirmation. We're just sitting on our hands, waiting patiently, not getting too aggressive, not taking excessive risk, avoiding buying up here. And then we're also not selling down here yet. We have our invalidation points and we're just waiting. We just, let the market tell us what it wants to do. There's a lot of uncertainty, a lot of volatility. The charts ultimately at the end of the day tell us what is going on. So ignore all the noise, focus on your strategy, and execute it when the time comes. So thank you so much for watching, guys. If you like the content, please like, share, subscribe, and I'll see you guys in the next one.